Hi, Harry Dent here on April 21st with the Rant. Of course, we continue to watch this, what I think is the crash of our lifetime enveloping, and it's taken 5 years. This is how much they have pushed this back. I mean, nobody has better formulas for the natural cycles in technology and generational spending. And basically, the baby boom peaked in 2007 and would have been down all the way into late 2022 for the stock market, 2023 for the economy with natural cycles. And on top of that, the 45-year technology cycle peaked around late 2019, and that's been down ever since and will not turn up until 2032-33. Okay, so all natural cycles say you put them together. We had the first crash, 2007 to 2009. It'd been fine to have some sideways movement after that, and then we should have had a second crash, which would have ended a long-term down period, which we get, every 40 years on generational cycles, 1929 to 42, 1968 to 82, and now late 2007 into late 2022 should have been the down cycle, okay? But instead, print 20, run deficits and print money in 27 going on 30 trillion in stimulus. Oh, it disappears, So this continues to be the multi-trillion dollar question for me. And I tell you, I don't have a perfect answer for this one. This has never happened, that governments just stamp out a natural, healthy correction after a major bubble. And by major, I mean no bubbles comparable, okay? This bubble from 2009 into early 2009 into early 2025, just peaking 16 years of bubble activity. And of course, the most bubbly came from COVID forward, okay, the last 5 to 6 years. But still, the entire thing was a bubble. The bubble phases of bull market in the past have never lasted more than 5-6 years max. So again, that's what that much stimulus does, okay? So grand experiment, yes. What I'm hoping for and what is deserved here, I'm not being just a ninny about this, okay? This should not stand. This should be the greatest lesson in history. You just can't just print your way to prosperity. It takes generations working, learning, growing in their life cycle. It takes new technologies changing how we work and do business. And of course, like you say, that's why we had the greatest boom in history. And I have credibility because I predicted that huge boom before it happened in the early to mid 80s, just as it was starting to emerge and people thought the US was dead forever, okay? So where are we now? Is this the big crash starting? And again, still looks like it at this point. We've got the two leading sectors of this bubble, where crypto, led by Bitcoin, and AI now coming later and strong, led by NVIDIA. Bitcoin is down 27.4% at the most recent low, okay? NVIDIA is down 28.9%, okay? That is a really good start. 10 to 20% does not signal the end of a major bubble. We need to see action more like this. And we need to see a first crash, which is at least 40%, say, on the S&P 500, 50% on the Nasdaq, and that or more in these leading stocks and all. And now, so far, the Nasdaq's down 12.4% worse. QQQ, the top 100, the best part is down 10.2%, okay? That's the highest quality. S&P 500 only down 7.5%. So again, we need to see more follow through, and everybody should be expecting this until proven otherwise. Now, at the same time, I'm always looking at short-term indicators as well. Some of the best people I follow are saying, hey, we're due for some sort of bounce here near term, okay? We're oversold short term, so don't expect this to happen right away. But anybody wanting to sell more that didn't sell, I would sell into the next bounce, and it's probably not gonna last terribly long, okay? So again, we're looking for 40% down on the S&P, by the end of this year, and hopefully by maybe the fall, okay? 51% is what I project on the QQQ and Nasdaq, and again, that's just going back to the late 2022 lows. It's not going back that far, okay? So this is Nothing strange. Any major correction should go back to at least the last major low. And the last major low was 2009. And that takes it. I mean, the minor low was 22. The major low was 2009, okay? That takes us back to 86% down in the S&P 500 and 94% on the Nasdaq. So people shouldn't be thinking, oh, yeah, you know, we'll even a healthy correction. No, a healthy correction now is a depression, okay? Because that's how big the bubble is. That's what tells us how big the bubble is. Just to raise the bubble, we got to go down that much, okay? And again, I just looking the other day, the S&P 500 is 2.4 times higher than would have been if I'd have projected out my natural cycles. And I mean, in high valuations, normal high valuations at the top. 2.4 times, that's how much this stimulus has jetted the markets out of reality. Folks, they have to come back down for the health of the economy, for the affordability of everything. I mean, the poor millennials, we're leaving their boom compromised by our high debts and their financial markets in the future for their investments to retire on, already so overvalued, they'd be lucky to break even holding stocks for the next 10 to 20 years unless we get this crash. So this is healthy, it's normal, and remember, you just have to return to common sense here. You can't print your way to prosperity. Governments can't constantly, and this has been ever since 2001 now, and particularly since 2009 recession, you can't just run deficits forever and never pay them down and just keep running up, because we have to pay these back with our treasury bonds over the next 10 to 30 years. So again, all we're doing is compromising the future to avoid a downturn. We have major recessions all the way back to the 30s, and of course all through history, but particularly since the 30s, major recessions every decade, once a decade. They're healthy, they're good. This one has to be bigger now because we've allowed the bubble to get bigger. And this bubble, remember nothing else. First, 100% artificial bubble since the Mississippi Sea and South Seas bubbles of 1720 to 22, okay? And those were 100% government generated back then, okay? And they crashed 99% in 1 year. 2 years to build, 1% to crash. This bubble longer, so it's going to take at least 2.5, 3 years to crash from this. And that's why I'm looking at maybe mid-2025 here into 2007, okay? Late 2007 or so, and we'll just have to monitor this as we go along. But it's going to take at least that long. So get ready for a major downturn. Again, this should be the crash of our lifetimes. And the worst part, if it's not, then we are hampered. We're going to be carrying the weight of these unproductive debts and these overvalued financial assets for the rest of our lifetimes if we don't have this simple shakeout. And of course, I'll keep you updated.